Let us learn about bank reconciliation statement. The cash book of the business in the bank column records transactions taking place in the bank account of the business. That is the movement of cash held with the bank or cash in the bank relating to that particular business. Ideally, the cash book should therefore be showing all the records of the transactions that have taken place between the bank and the business. At the same time, the bank is also recording the transactions. The bank is also recording these transactions and occasionally provides a bank statement showing the balance as at the bank at that particular time. In fact, nowadays, many businesses are holding online banks where they can easily be able to see the bank statements. This bank statement is expected to show the same balance as the balance which is being shown in the cash book of the business. But this is usually not the case. Many a times you find that the balance in the bank according to the bank statement and the balance in the bank according to the cash book is not the same. This is caused by a number of reasons, and the reasons are as follows. Cash book of the business. There are a number of items which are appearing in the cash book of the business, but such items are not in the bank statement of the business. Such items include the following: checks issued by the firm, but not yet presented for payment. This is in a case whereby the firm issues a check for payment to an individual or to another business, but then due to some reasons, they have not presented such checks into the bank to get paid. That means the such checks which have been entered already in the cash book of the business has already been paid out. So on the payment side of the cash book, that check is indicated as has already been paid out, but then it does not appear in the bank statement because it has not been debited in the business bank account. Secondly, checks deposited into the bank but not yet collected. These checks sometimes can be cash deposited. So when checks are deposited, usually there's a transaction period, which may be 1 day, which may be 2 days, but depending on the bank. Therefore, if a bank statement is picked immediately after debiting such checks, then such checks will not be found in the bank statement. However, they are found in the cash book of the bank on the debit side or on the receipt side as having been received in the bank. Next is errors committed by the firm in recording the transactions. This occurs where maybe the firm has overstated a payment or a receipt, understated a payment or a receipt, or a deposit which is being deposited into the bank, they overstate or understate in the cash book by mistake, maybe. Deposits and payments misposted. Instead of posting, let's say, on the credit side, they are posted on the debit side, and that may also be a problem. And lastly, overcasting or undercasting the balance in the cash book. That is also another problem. If the balance of the cash book carried forward or brought down is overcasted or undercasted, that may be arithmetic problem or just a misposting problem. That may also cause the difference, because if the balance in the bank or if the bank statement is correct, but the cash book has an error, then such an error will only be found in the cash book, but not in the bank statement. Now, these three items causes a difference between the cash book and the bank statement, and these are only items which are appearing in the cash book alone. There are also items which are appearing in the bank statement, but such items are not reflected in the cash book. They also cause the differences. The first item is bank charges. This is in a case whereby the bank has charged a fee, the bank has charged a commission, and so on. And these are usually not reflected in the cash book unless the the bank statement has been collected, and then you can find the charges which have taken place. They include overdraft interest, credit card fees, outstanding checks, etc. So these are found in the bank statement only, but not in the cash book. Next is direct debits. Example of this direct debits is a standing order. This happens in a case whereby the bank makes some payment out of the bank statement. This happens in a case whereby the bank makes some payments on behalf of the customer, especially due to customers' prior instruction, like a standing order. Having instructed the bank to make payments, then the bank will be doing the payments regularly. And in case the customer has not yet collected the bank statement, they will not be able to update the cash book until when the bank statement is collected. The next one is dishonored checks. These are checks which have been returned, having been deposited to collect payments. Such payments may be rejected, for example, or the check is stale, or the check is postdated, there is insufficient funds, and lastly, if there's difference in the amount in the check in words and also in the figures. Next is direct credits. This is whereby a customer or a debtor or any party pays the business directly through the bank's account. Before submitting the deposit slip to the business may not update the account. This therefore leaves the bank statement having more credits than the cash book. Errors of the bank or errors made by the bank. Also, at times, the bank may make and commit an error related to the business bank account. For example, a wrong check being credited or debited the business bank account. Or such errors may include overstating or understating balances and transactions, overstating or understating deposits, or withdrawals. So such can make a difference. Or sometimes it's just an error of deposit or an error of withdrawal. And such may cause the difference between the bank statement and the business cash book. Because of this, there is need for bank reconciliation. And bank reconciliation statement is prepared to explain this particular difference, to find out this particular difference. So that then gives us the following purpose that the bank statement need to fulfill. One of the purpose is to update the cash book with the items which are appearing in the bank statement but not appearing in the cash book, such as bank charges, bank interest, dishonored checks, and any other adjustments of errors. Secondly, the business can use the bank reconciliation statements to detect and prevent fraud and errors which are related to the cash book, and to detect and prevent fraud and errors related to the bank. Let us now look at the steps followed in bank reconciliation or in preparing the bank reconciliation statements. The first step is to adjust the cash book or update the cash book with the items appearing in the bank statement but not appearing in the cash book, except the bank errors. Bank errors should not be adjusted in the cash book. Secondly, compare the debit side of the cash book with the credit side of the bank statement to determine if there are any uncredited deposits by the bank. And thirdly, Compare the credit side of the cash book with the debit side of the bank statement to determine whether there is any unpresented checks which have been issued by the business. And lastly, prepare the bank reconciliation statement, which should be able to show unpresented checks, uncredited deposits, errors on the bank statement, and the updated cash book balance. The format of the bank reconciliation statement is as follows. It can take any of the two formats. The first one is beginning with the adjusted cash book balance, updated cash book balance, to which we add unpresented checks and bank errors. If there are any bank errors which are increasing the bank balance, then less uncredited deposits and bank errors which are understating the bank balance. That then should give us the balance as per the bank statement. Another format that can be followed is beginning with the balance as a bank statement, then add uncredited deposits, add errors that are understating the bank balance, less unpresented checks, and add errors which are overstating the bank balance. That should give us balance as per the cash book. That should give us the balance as per the cash book. Right. So this is how to prepare a bank reconciliation statement. And to illustrate this, let us look at the following example. It is that Jane is having a problem reconciling her bank account to her cash book at 31st December 2020. The cash book at that date shows a credit balance of 208,350. The reconciled bank balance by the books at 1st November 2019 was an overdraft of 391,800. The bank statement disclosed a debit of 148,50. The following additional information has been obtained. On 2nd August 2020, Jen entered into a 2-year rental leasing at a monthly payment of 6,900. The first payment fell due on 2nd August, with subsequent payments being due on the 2nd day of every month. All payments have been made by a bank standing order on the due dates, but no entries relating to the payments have been made in the cash book. A bank lodgement of 137,100 on 6th October 2020 had been entered in the cash book as 134,550. 2 checks lodged into bank during the year amounting to 11,700 were returned to the bank, marked refer to the drawer. Either check had been requested, had been represented to the bank prior to 31st October 2020, but both checks were subsequently paid. No adjustments have been made in the books in respect of the return of these checks by the bank. A subtotal of credit of the cash book of 3,330,000 has been carried forward as to the subsequent page as 3,303,000. The following checks, all in respect of purchase, read and written on the date stated, had been presented at the bank prior to 31st October 2020. Now these are unpresented checks. Lastly, the bank charges of 12,750 and 18,000 had been debited by the bank in the bank statement on 31st May 2020 and 31st October 2020 respectively, but no entries for these amounts had been entered in the cash book. Required, show the adjusted cash book balance and prepare bank reconciliation statement as of 31st October 2020. For us to answer this question, we are required to prepare adjusted cash book. And we are adjusting the cash book by entering the items which are in the bank statement and are not found in the cash book. We are entering them in the cash book. And therefore, we prepare the cash book as follows. That is the adjusted cash book. We start with the balance brought down, and we told that the cash book as of that date shows a credit balance of 208,350. That we enter on the credit side, and you say balance brought down. The balance brought down there, which is on the credit side of the cash book, is 208,350. 208,350. Now to that, we make adjustments as follows. On 2nd August, Jen entered into a 2-year rental leasing at a monthly payment of 6,900. That is per month is 6,900. And the first installment was supposed to be paid on 2nd August, and that has always been paid by the bank, but no entry has been made in the cash book. So that means the first payment should be August, another payment in September, another payment in October, 2nd of August, 2nd of September, and 2nd of October. Those are 3 payments because the year is ending on 31st August for this particular company, 31st October for this particular company. So it means by 31st October, 3 payments shall have been made. And therefore, we multiply the monthly rental of 6,900 by 3. The monthly rental is 6,900. If we multiply that by 3, then we are getting a total of 20,700. And being that these are payments, they need to be subtracted from the cash book or entered on the credit side of the cash book. And we call that standing order. That is a standing order. Or we could call it rent. So these are standing order for rent. So it's 20,700. 20,700. Next, a bank lodgement of 137,100 on 6th October, that is within the year, had been entered in the cash book as 134,550. This was an error in the bank. This was an error in the cash book. This was an error in the cash book. So we correct the error in the cash book. An amount that was entered in the cash book, a bank lodgement is a deposit. So a deposit was made. The deposit is 137,100, but instead what was entered as the deposit in the cash book is 134,550. Now, to correct the error, first, we need to enter on the opposite side the wrong amount that was entered. The wrong amount was entered on the debit side. And now we need to cancel it by entering the right, that same amount. To cancel the error, enter that amount on the opposite side. It was entered on the payment side, or on the receipt side. So on the payment side, we enter the same amount to cancel the error. To cancel the error, enter it there. And then enter the correct amount now, which is bank lodgement. So bank 137,100. Right. So that is how to answer to correct that error. Alternatively, we could correct that error by finding the difference between the correct amount and the wrong amount by saying the correct amount is 137,100 minus the wrong amount, which is 134,550. And that gives us a difference of 2,550. And in this case, we were supposed to, if we are getting the difference, which is 2,550, then we enter that difference on the side which was understated, because in this case, there was understatement. The understatement is an understatement of 2,550, which is on the receipt side. So we could alternatively enter the understatement on the receipt side, which is 2,550, instead of entering both the figures. But I've taken the approach of entering both the figures. We also told that 2 checks lodged into the bank during the year amounting to 11,700 were returned to the bank marked refer to the drawer. Neither check had been represented to the bank prior to 31st December. Both checks were subsequently paid. No adjustments have been made in the cash book for them. Right. So this is what's called dishonored check. And if it is a dishonored check, then we need to record the dishonored checks on the credit side. So here we have dishonored check. The dishonored check is 11,700. 11,700. Subtotal on the credit side of 3,330,000 had been carried forward to the subsequent page as 3,303,000. That is a difference of 27,000, which was an overstatement on the credit, an understatement on the credit side. So if there is an understatement on the credit side, then we need to record the understatement on that credit side to increase it. Increase the credit side by that amount of understatement. So understatement here is 27,000. Information, the next information, which is saying that the following checks in respect of purchases were written on the date stated, had not been presented. Unpresented checks here are items of bank reconciliation. They are not adjusted in the cash book, but they go into bank reconciliation statement directly. Those ones are going to the bank reconciliation statement. Lastly, we told that bank charges of 12,750 and 18,000 had been debited by the bank in the bank statement on the respective dates, 31st May and 31st October, but no entries for these amounts have been made in the cash book. Now, this is an omission in the cash book, and these are bank charges. So we say bank charges. There is the first bank charges, which is 12,750, and also another bank charges, which is 18,000. Right. So in this case, we have already determined, we have recorded all the transactions, and now we balance off the cash book. As we balance off the cash book, we are going to enter balance carried down. We're going to enter balance carried down on this side, on the debit side, because the debit side is lower than the credit side. So let us see the balance carried down. The balance carried down equals to 295,950. 295,950. That is the balance carried down. And then after the balance carried down, we just enter the total, which equals to 433,050. 433,050 equal to 433,050. That is now the total, and the balance is 295,950. Now we take that balance and we use it to prepare the statement, bank reconciliation statement. We use it to prepare bank reconciliation statement. So we have the bank reconciliation statement as follows. Begin with the balance as per adjusted cash book. Balance as per adjusted cash book equal to 295,950. Add unpresented checks. And we have several unpresented checks. On 28th August, the check amount unpresented is 24,750. On 14th September, the check amount unpresented is 29,400. On 24th September, the check amount unpresented is 78,900. On 26th September, the amount of unpresented check is 3,000. On 29th October, the amount of unpresented check is 11,850. So all these are the unpresented checks. And we add them, the unpresented checks, we add them to the balance as per the adjusted cash book. And if we add that, then we are getting a total which is equal to 148,050. 148,050. And this 148,050 should be equal to balance as per the cash book. Balance as per the cash book. This balance is because the balance at the beginning was a negative. The balance at the beginning was a negative because there is a debit balance in the cash. It is a credit balance in the cash book, meaning the debit side is greater. When the balance appears on this side, it means this is a credit balance because the credit side is greater than the debit side. So that is a credit balance, which is a negative, showing an overdraft. So the balance as per the cash book adjusted is an overdraft of 295,950. Then we add all these unpresented checks. We are getting an overdraft of 148,050. That is equal to this amount, an overdraft of 148,050. An overdraft of 148,050, as you can see inside the question. In the question, we have 148,050 as the overdraft. And that is how to prepare the bank reconciliation statement.